Matthew, with some good news for the French economy.
Yes, some good news for a change about the state of the French economy. This is one sector that's doing particularly well, which is tourism. France has remained the #1 tourist destination in the country, whether it's beaches, mountains, or, as we can see here, the delights of Paris, such as the Eiffel Tower. 83 million foreign visitors came to sample them last year, and they're spending more too, contributing over 35 billion euros to the economy. And it's Asian tourists that are growing the fastest. Their numbers were up 10% last year, but it's still Germany that sends the most visitors here, over 12 million in 2012.
But even that's not enough to get some growth in France this year.
No, that's right. We need a lot more Germans coming, I think, in order to sort that out, because the French economy this year is likely to be stagnant. In fact, the International Monetary Fund was updating its forecasts just yesterday, said that there will be a decline of 0.2%. It's still looking forward, though, to some growth in 2014. But as the IMF was giving those forecasts for the whole world economy, it seems that it's emerging economies that are causing real concern. Their growth rates are slowing down, which has some worrying implications for the global economy. Luke Schrago has more.
A bumpy recovery and weaker growth than expected. That's the International Monetary Fund's latest outlook for the global economy, specifically when it comes to emerging markets.
After years of strong growth, the BRICS are beginning to run into speed bumps. This means that the focus of policies will increasingly need to turn to boosting potential output growth, or in the case of China, to achieving more sustainable and balanced growth.
The IMF cut the growth estimate from 5.3 to 5% for the world's leading emerging economies: Brazil, Russia, India, China and South Africa, mostly due to a slowdown in domestic consumption and weaker exports. China, for its part, can also blame unbalanced growth.
The explicit plan, actually, is to move from investment to consumption. It is, as we all know, not easy to do, and the question is whether it can be done in a smooth way. I think the risk is that the slowdown in investment comes first, and there is just not the increase in consumption which is fast enough to compensate.
It's led to decreased expectations for global commodity exporters too. China's position as one of the world's top energy consumers means any decline there could have severe consequences in terms of knock-on effects.
Well, and some data out of China to underline the problem. The monthly trade surplus in June is out $27 billion. But look at the figure for exports there, down 3% in June. That's the first fall in 17 months. So continuing to raise concerns about the health of the economy there in China.
And how are the markets reacting to those China numbers?
Yeah, markets have fallen back slightly from where they were earlier after those numbers came out. The Shanghai Composite still making some gains, you can see there, but the Japanese and South Korean markets slipping back.
Here in Europe, Matthew, a steep cut in the outlook for Italy.
Yes, now staying with the IMF, they reduced again their forecast for the Italian economy this year, 1.8% decline. And Italy, of course, has been in recession now since mid-2011, has an unemployment rate of over 12%. And just to add to that, Standard & Poor's, one of the three main ratings agencies, has cut its rating for Italy. That's along with Moody's and Fitch, which did it recently. It's cut it to BBB, and I thought I'd just show you what that actually means, because we always talk about these ratings. BBB, in fact, is one of the lowest of the what's called the investment grades, and they run from sort of A down to just below BBB. And investment grades are really those, you can see them there, those that are seen as fairly secure with high levels of credit worthiness. So Italy's still in that range. It's the speculative grades beneath that which go down to D, where things are generally riskier, but Italy moving in the wrong direction there.
Okay, thanks for clearing that up for us.
I'm sure you wanted to know that.
Absolutely. Now, the head of Blackberry got a bit of a grilling at the company's annual meeting.
Yes, it sounds like this was a bit of a difficult meeting for Thorsten Heins, who's the head of Blackberry. Now, the company's been having trouble with this new Blackberry, these new smartphones operating on the Blackberry 10 system. Sales don't seem to be going as well as they'd hoped, and investors in the company were giving him a hard time. And Thorsten Heins asked for more patience with the turnaround that he is trying to achieve at the company, and he described the battle really as an uphill battle to reverse the group's fortunes.
Okay, that's it for business. Thank you very much, Matthew. Time now for web news, and we start things off with an Egyptian petition gaining ground across